Hello, good morning and welcome to Business 360. And my name is Blyden Ukem. On Business 360 this morning, China condemns Trump's 100% tariff. We begin from there. China has condemned United States President Donald Trump's decision to impose 100% tariff on Chinese goods, describing it as hypocritical and warning that it could further strain global trade relations. According to reports, the Chinese Ministry of Commerce said Washington's move had undermined ongoing trade negotiations and damaged the atmosphere for economic cooperation between both countries. Trump had on Friday announced a 100% tariff on all Chinese exports to the U.S. and introduced new export control on critical software, with the measures set to take effect from November 1st. A multiple observation regarding this has found its constraint amid multiplicity of a situation in the world of trade. Well, these concerns have made the United States of America putting in more constraint on global trade. China, on the other hand, are asking questions about it, and analysts are also looking at the possibilities of changes that could happen. And these effects has affected businesses, many commodities in the market, from the oil market to the price of copper and the price of stock markets around the world. A multiplicity of the concerns standing in that direction. While anticipating multiple discussions in the world of business as China condemns a trade situation in the world, it is a quest to also look at further philosophies around the world as impending issues in the country and Nigeria takes place in the world of business. Our businesses are set from perspective to perspective. The foreign airlines are frustrating cargo clearance, according to agents in Nigeria. Licensed agents under the aegis of the Africa Association of Professional Freight Forwarders and Logistics of Nigeria have accused some foreign airline operators of frustrating cargo clearance at Nigerian airports by failing to transmit cargo manifest to the Odogo platform of the Nigeria Customs Service. The president of the agency, Frank Ogonojemite, in a statement said the problem was particularly common at the Nnamdi Azikiwe International Airport, Abuja. Ogonojemite explained that the situation had crippled smooth cargo clearance, leading to the excessive delays and huge demurrage and storage charges for freight forwarders, importers and other logistics stakeholders operating through the Abuja and Lagos airport. He added, despite repeated appeals and engagement with relevant authorities, he said, the absence of submitted manifests on the approved Biodogo's digital platform means custom officers cannot access or clear cargo efficiently, leaving consignments stranded and importers helpless. Meanwhile, Nigeria's naira depreciation, inflation has reduced real value and gains of Nigeria's fiscal reforms, according to CPPE. The Center for the Promotion of Private Enterprise, CPEE, says the rising inflation and naira depreciation have moderated the real value of the gains of fiscal and tax reforms in Nigeria. CPPE Chief Executive Officer Amoda Yusuf disclosed this in a statement. According to him, the two landmark policy measures, the removal of fuel subsidy and the unification of exchange rate, have significantly boosted government revenues, expanded fiscal space, and improved the capacity for public investment. He noted that Nigeria has witnessed improved collection from value-added tax (VAT) and company income tax (CIT), reflecting stronger compliance and a gradual recovery in economic activities. Additionally, the economic think tank noted that sub-national governments are reporting higher revenues and increased allocation to agriculture, infrastructure and social development. However, CPPE stressed the rising inflation, which stood at 21.12% in September, and currency depreciation at 1,455 naira per dollar as at Friday, have moderated the real value of the gains of fiscal reforms in the past 2 years. He further explained that Nigeria's budget of $36.7 billion has remained relatively small compared to South Africa's $141 billion, Algeria's $126 billion, and Egypt's $91 billion, which limit fiscal capacity for transformative investment in infrastructure, human capital, and social welfare for Nigerians. Consequently, the agency urged the federal government and subnationals to focus on priorities such as road power, ports, and digital infrastructure to reduce business costs and improve competitiveness. Meanwhile, Dangote Cement begins Ivory Coast operation. Dangote Cement has officially launched its operation in Arctic, some 30 kilometers from Abidjan, Ivory Coast. According to a statement by the group, the announcement was made by the managing director of Dangote Cement Ivory Coast, Serge Abota, at the Novotel Abidjan Makori. Covering an area of 50 hectares, the plant reportedly has a production capacity of 3 million tons of cement per year, making it one of the group's largest facilities outside Nigeria. This strategic project, with an estimated investment of 100 billion CFA franc, embodies Aliko Dangote's vision of building a self-sufficient Africa that's less dependent on imports and capable of transforming its resources into world-class finished products. Still in Nigeria, the Nigerian Upstream Petroleum Regulatory Commission (NUPRC) has disclosed that 11 crude oil cargoes offered to local refiners in a month were not taken up despite their repeated complaint about crude shortages. The Chief Executive Officer of NUPRC, Benga Komalafe, who was represented by an official of the Commission, Aboma Atieboga, met the stone during a panel session at the Crude Oil Refinery Owners Association of Nigeria Summit held recently in Lagos. According to Komalafe, while refiners had consistently raised concerns about the non-availability of feedstock for local processing, the Commission's record showed that crude oil was being made available under the domestic crude supply obligation. It could be recalled that the 650,000 capacity Dangote refinery has consistently decried the lack of enough crude supply to its plants. Officials of the refinery said the plant was increasingly depending on the United States to get feedstock. In the same vein, owners of crude modular refineries repeatedly complain of crude shortages, asking the federal government to implement the domestic crude supply obligation as enshrined in the Petroleum Industry Act. However, Komalafe disagreed with the claim, saying there were different reasons why refiners could not take crude from oil producers monthly. Using April as a reference, he said 48 barrels were made available for exports, out of which 21 were reserved for local refining, but only 10 were lifted by refiners. Explaining the reasons for the unclaimed cargoes, Komalafe said the matter was largely commercial and technical, not that of the oil, and that the oil was not available. Meanwhile, a bond rally continues at yields deep 18.38%. Nigeria's bond market sustained its bullish momentum last week as investors showed increased appetite for a sovereign debt instrument, pushing average yield down by 19 basis points to 18.38% from 18.57% recorded in the previous week. The bullish sentiment was driven largely by strong demand for specific longer-dated instruments, notably the January 35 and March 27 and April 32 bonds, which saw yield compression of 64 basis points, 39 basis points, and 36 basis points respectively. Analysts attributed the heightened demand to improved market liquidity and a relative slowdown in inflationary expectations. However, Despite the broad rally, some selling pressure was observed on the April 32 and June 33 bonds, leading to yield increases of 36 basis points and 18 basis points respectively. Market watchers say the mixed sentiment reflects selective positioning by institutional investors ahead of upcoming policy cues. In the primary market, the Debt Management Office offered 100 billion naira worth of FJN bonds in its June auction, significantly lower than the 300 billion naira it had offered in previous months. The Minister of Solid Mineral Development, Dela Lake, has announced plans by the federal government to establish a new pre-shipment inspection agency for the solid mineral sector as part of ongoing efforts to block leakages and boost revenue generation. Alake disclosed this at a pre-event press briefing ahead of the 10th edition of the Nigeria Mining Week, scheduled to be held from October 13th to 15th, 2025 in Abuja, where he explained that the new framework forms are part of a broader regulatory and policy initiative aimed at blocking financial leakages and ensuring accountability within the sector. According to the minister, the move aligns with President Bola Tinubu's economic reform agenda to enhance non-oil revenue, strengthen fiscal discipline, and reposition the mining industry as a major contributor to the country's GDP. And now we'll go on a quick break, and when we're back, Business 360 continues looking at global economic standings around the world and the markets. Don't go anywhere. Welcome back. It's your Business 360, and my name is Blyden Ukem. And now to global economic standings and the markets. We begin from China as China exports, imports beat estimates. China's export rose 8.3% year-on-year in September 2025, topping forecast of 6% and marking the strongest gain since March, boosted by robust global demand and firm push into new markets. Meanwhile, imports surged 7.4%, well above a 1.5% forecast, and the fastest growth since April 2024, driven by firm domestic demand ahead of Golden Week holiday and ongoing government-led infrastructure spending. And now to the market as gold hit all-time high. A gold scale an all-time peak of $4,070 per ounce today, driven by safe-haven demand amid renewed U.S.-China trade concerns, broader economic uncertainty and expectations of further U.S. interest rate cuts. President Trump on Friday threatened to impose extra levies on 100% on Chinese exports, along with new export controls on critical software from November 1st. However, he softened his stance on Sunday, saying America wants to help China and not harm it. Beijing defended its rare earth export curbs and warned it's readying countermeasures against any U.S. tariff. Adding to market jitters, the U.S. government shutdown has stretched into another week, with the White House moving ahead with mass layoffs of federal workers. Meanwhile, traders are widely expecting the Federal Reserve to deliver 25 basis point rate cuts at each of its remaining meetings this year. Still on the commodity market, copper jumped nearly 3% towards $5 per pound today, recovering part of Friday's losses after U.S. President Donald Trump said in a Truth Social post that trade relations with China will all be fine, signaling openness to negotiation amidst with Chinese President Xi Jinping later this month. Copper had slumped more than 4% on Friday. Meanwhile, supply pressures persisted as mine disruption in Chile and Indonesia continued to limit output, with China's Codelco recording its lowest monthly production in over 2 decades in August and output at Indonesia's Grasberg mine is still constrained following last month's fatal accident. Let's go to the market, the metal market first, afterwards agricultural commodities. The metal market. A metal market indicates the price of gold at 4,071 US dollars per pound. US dollars per ounce rather. Price of gold at gaining 57.94 points, a 1.44 percentage gain. Silver price at 51.32 US dollars per ounce, also gaining 2% this morning. A copper price upward by 3.72% at 4.97 US dollar per pound. Steel price falling by 17 points this morning. And now to other market, agricultural market. Agricultural markets indicates the price of soybeans at 1,008 US dollars per bushel, indicating a gain of 2.12 points and 0.27%, and wheat price going down by 1.09 points, a negative 0.22%. A lumber price also not changing in the market anyway, but a gain of 0.5 point, and palm oil price at 4,000. Palm oil price at 4,491 Malaysian ringgit per ton, falling by 55 points this morning. And now to the energy market. Energy market indicates the price of crude oil, US crude at 60 US dollars per barrel, upward by 1.21 point, a 1.9 percentage gain, while Brent at 63 US dollars per barrel. Brent represent Nigeria's price benchmark, gaining 1.066 point, a 1.7 percentage gain. Natural gas a little here, a little there, but on the negative, and gasoline gaining 2% this morning. And now let's talk about the state of Nigeria's naira in the financial market as the naira hits a 10-month high on strong FX inflows. The naira extended its gain at the official market last week as it gained 0.72%, an equivalent of 10 naira of 50 kobo. It took close at 1,455 naira 17 kobo per dollar, the strongest it had been since December 2024. Data from the Central Bank of Nigeria revealed. Analysts disclosed that the performance of the naira, the performance of the domestic currency was driven by a robust foreign exchange inflows from portfolio investors and remittances. At the parallel market, the naira strengthened 0.88% to 1,475 naira per dollar, also supported by improved liquidity. The FX market had traded mixed through the week. It opened on a bearish note as early demand pressures caused by the exit of foreign portfolio investor led to a dip. However, the market sentiment shifted midweek, buoyed by strong foreign inflows, particularly from FPI sourcing naira to meet local fixed income obligation. And now to the market, the US dollar against the naira and the euro against the US dollar. And after we'll look at the state of the cryptocurrency. The US dollar against the naira. A US dollar against the naira price level stands at 1,461 naira to the US dollar. The naira falling by 1.7 points and a negative 0.12%. The euro against the naira at 1,694 naira, equaling 1 euro, and the euro also falling against the naira by 5 points. And similarly, we're talking about the price of the pound against the naira at 1,948 naira to the pound. The pound falling by 6.5 points against the naira. And now to the cryptocurrency market. Let's look at the state of the crypto market. A Bitcoin price stands at 115,114 US dollar. A Bitcoin falling by 38 points, and Ether at 4,162 dollars for one Ether. The Ether falling by 2.66 points. Binance gaining 4.41% this morning, and Cardano also gaining as well as Ripple at 3.89%. As we set to close, let's look at the last outline in this one. It has to do with the Nigerian stock market in the last 7 days. The market has climbed 1.4% in the last 7 days, leading by the materials sector with a gain of 5.1%. In the last year, the market has climbed also 59%. A multiple observation indicates as for the next few years, earnings are expected to grow by 23% per month regarding Nigerian stock market. Now let's look at sectoral trends in the last 7 days. Sectoral trends in the last 7 days. Sector trends in the Nigerian stock market have shown the tech sector are gaining the most, 7.63%. The material sector also gaining 5.14%. Industrial sector gaining in that direction 3.13%. And healthcare sector also gaining. But the weakest of them all, while utility sector is also dropping a negative 0.27%. And now let's look at the top gainers in the last 7 days. The top gainers in the last 7 days. MTN Nigeria are gaining at a price level of 471 naira per share, upward by 10.8%, adding a whopping 964.6 billion naira to its market. Well, Dangote Cement at number 2, and International Brewery number 3, Nigerian Brewery number 4, and WAPCO number 5. Well, the top losers now. Top losers in the Nigerian stock market in the last 7 days, according to prices, Ardell holding at 628 naira per share, falling by a negative 3.4%, wiping out 96 billion naira from the market share. Zenith Bank at number 2, Bois Cement number 3 in terms of losers, Wando number 4, and Access Corp number 5. And lastly, let's look at what the state of the African stock market is as we close. The African stock market this morning, what the pricing is for the African stock market. African stock market beginning with price of the Nigerian stock at 146,988 index point, gaining 764 basis points, 0.54%. South African stock SA all also gaining, and SA40 and other South African stock gaining 535 basis points. Egyptian stocks EGX30 gaining 41 basis points this morning, while stocks in Nairobi, Kenya are falling by 27 points and 1 point respectively. It's so much we can look at in the world of business this morning. Thank you for being a part of it as we draw the curtain in today's edition of Business 360. My name is Blyden Kim. Thank you for watching.